Canary Islands. Wow. Amazing. So bear with me, guys, just 1 second, and we are ready to rock this webinar. It's really exciting session today because there were few outstanding setups we mentioned on the previous time. But so one more time, for those who join us on the YouTube channel, guys, I would like here at Elevating Forex to welcome you to another weekly Market Watch webinar. So I hope everyone is doing fantastic, not just great, and you are ready to get the most recent updates of the markets. Also, Ellen from Denmark, Marlon from Costa Rica, and Jean from No Se Escucha. Elias, hello and happy Easter. Hello, Elias, welcome. So, guys, before we start, Adam from London, perfect. Before we start, let's just let me run through the disclaimer. This content is for general information only and is not intended to provide trading or investment advice or personal recommendation. So, for those who are wondering, who is this guy in front of us? Guys, allow me to introduce myself. I'm a head trader here at Elevating Forex. My name is Theo Theodorou. It's very Greek Cypriot name, huh? Isn't it? So my experience and expertise in trading, first of all, I'm a certified financial technical analyst and a certified market technician. So I know pretty well how to create market analysis on a weekly basis, and that's why basically we are here, okay, because it's to get well informed about accuracy in the market. As a trader, it makes your trading life much more comfortable because you know precisely how to enter and exit the market. And that's my purpose here. And I hope that that's understandable throughout the webinar. So I have more than 10 years experience in trading. I specialize in currency trading, of course, and I love the currency correlation. And actually there is something on the Euro US dollar and Australian US dollar I spotted during my homework this weekend. So I will explain you that one. On a daily basis, I deliver market analysis, of course, beside my trading activity for hedge funds, for individual traders, and for prop trading firms. I create educational courses for trading and investing. And I'm a published author of articles in magazines, and I hosted events with traders like Steve Ninson, like John Bollinger. You might have heard about these guys, and Daniel LeCallen, and many more. So let's bring the charts. First of all, I would like to start with the DAX, the German 14, the German 30 or German 40 index, depends on your on the broker how it names it. Now, why I want to start with this one? Because on the previous webinar, guys, and please ensure that you copy and paste the numbers that I put on the levels here. There are not random numbers that I put. Guys, I hold certifications about how to make analysis, market analysis. It's been more than 10 years that I'm actively trading, and I look at the charts. So, and I do it from the professional perspective, not from what I believe. My beliefs are out of the markets. I don't put what I think in the market. I only put what I see on the charts. Okay, and that's, if you are a new trader, that's a great way to start. Just looking what's going on and trade accordingly. So what I pointed last week, it was this bearish engulfing order block, and it was exactly this level here. Okay, that equal top, I put it for this week. Okay, but the tradable opportunity arose at 12 p.m. sorry, on the previous Monday. So we had this level here. The price came at this level, even on the 4-hour chart. If you are busy, or if you want to do the swing trading and you don't want to go down to lower time frames, or if you are very you want to keep things simple and you are just started in trading, you just look one time frame, it's fine. You look at the 4-hour chart, we had this, I gave you this level, and a bearish engulfing occurred at on Monday, previous Monday. So what happened from here? That was a high probability entry to enter with a stop loss above here and take somewhere in this region the profit. Maybe we didn't wait for the price to come all the way here, but that was a 3.5 to 4% reward to risk only on a single trade. Okay, we waited for a couple of days. So what? That's the nature of this trading. Maybe you look, guys, every trader needs to start from somewhere. I started with a daily chart because I used to have a full-time job. I used to live in Australia where the times, now I'm in Europe, but back in Australia, the times were kind of horrible to trade intraday because during the New York trading session and the London trading session, it was like too late for us over there. So it was a kind of a barrier. That's why I choose to trade on the daily chart. And I was doing that with pretty much great results because you repeat the same thing, it just takes longer time. So that was one good trade. And another good trade, it was on the S&P 500. We had this bullish, this one here. We had this area on the chart, and on Wednesday, even before the Feds announced their interest rates, it was this price action pattern here with a false breakout. Do you see that? This one here. I'm very firm into price action because that's the most leading indicator in the market. Okay, so an entry from this one here with a stop loss somewhere there and take profit somewhere at this level. Previous swing high, it was an exceptional reward to risk ratio. You can measure it on your chart. So when we do the analysis here and we explain what we expected to happen, feel free to put the lines, to put the levels, and look for the price action. Okay, if you need help about how to read the price action, just send us a message on support and I will try to help you as much as possible. On the Australian dollar, US dollar, starting for the week ahead. Guys, any questions? Please, please, please. Can you put them on the chat below? Jeron asked, hey, Theo, before you start. Okay. I just read your message. The USD Canadian dollar closed market on the long entry. Do we take it on the market open? Guys, personally, I don't like to take trades right on Monday at the market open because of the gaps and especially after the non-farm payroll. Okay, let the market, let's say, get into the Asian trading session and Sydney trading session to see kind of fluctuations. It's gonna pass about, let's say, 8 hours. So we're gonna see a couple of 4-hour candles to form, and then we can take some better decisions from that point. Okay, so at this point here, we have this bearish engulfing order block. That's a 4-hour time frame. We are on the Australian dollar, US dollar currency pair, and the price rejected, and that's great. So what do we want to see? We want to see kind of consolidation and price action stays within this bearish candle. Why we want to see that? To ensure that buyers are not in the market. And when I say, when I say buyers, I mean buying orders. The market, they move based on buy and sell orders that they interact at every single price level. The market doesn't move based on news. Guys, write this down. The markets, they don't move based on news events, and they don't move based on anything that is beside the buy and the sell orders that are placed by market participants. These market participants might be traders, might be retail traders like us, or prop firm traders, same thing, retail traders, might be hedge fund traders, might be the banks, the Citibanks, the JP Morgan, these are the market makers. For those they don't know, this JP Morgan, the Citibanks, those large banks. might be by the governments. Okay, so but everybody, all these traders, they are placing orders in the market. Okay, so keep that in mind. If the price now, on the other hand, it will move during the Sydney session, because the Australian dollar is very active during the Sydney and Asian session generally. If it's going to move upwards and surpasses this previous week high, which is the 0.66444, then we might see an uptrend continuation. Okay, but if that won't occur and we see a kind of similar behavior like the one you see on the left, then we definitely going to look to go for shorts. We let the price, and then it comes down to how to manage the position. We don't just enter short and we just say, okay, we go away, we're going to come back next year to check what happened. No, we enter, let's say, short, and once the price move a little bit and make at least 1-to-1, maybe we can close half of the position if we want. I personally, once the price goes to 2-to-1, I close half of the position. The way I manage my trades personally, when the trade goes to on these 4-hour time frames, on the swing trading, not on the intraday trading, each time frame requires different different active trading management. So on the 4-hour chart, when I take the swing trades, always price goes to 1-on-1, reward to risk, I drag the stop loss to break even, like trade I showed you on the gold some time ago, and then I let it run to 2-to-1 to take something out of the table, and then to the target area if it's going to reach the target area. Okay, so that's with the Australian dollar, US dollar. The next one is the euro US dollar. Let me go on the daily chart here. So on the daily chart, it's easier to see this price. Where is that one? So this price behavior, let's say that the market made this one lower lows, break all the structure, and lower highs here. So from the swing A here to the swing B, we draw the Fibonacci retracement and we find the 61.8, it's here, and the 50 was there. These levels, I gave them to you on the previous webinar as well, right? And the price during the non-farm payrolls, that now we are on the 4-hour time frame, during the non-farm payrolls, it surpassed the 61.8, but by the end of the session, it didn't close higher and it kind of rejected it. So similar scenario with the Australian dollar. If the price is going to stay from Monday onwards within this bearish candle, maybe you need a little bit more zoom in. If the price stays within this bearish candle, maybe we're going to see a good break to the downside, okay? But there is one important thing about the correlation of the currencies now, guys, and please pay attention to that. If the price will start trading higher on the euro US dollar, most likely, if this is going to happen due to the weakness of the US dollar, and it's going to drag everything else higher, like the Australian dollar, the euro. So if this is going to move to the upside to come and fill all these fair value price level here to enter into this bearish engulfing order block, simultaneously it's going to likely to drag the Australian dollar, US dollar higher as well. Okay, guys, so if this is going to move to the upside, most likely we're going to see a strong Australian dollar, US dollar. So don't get caught that if the Australian dollar, US dollar is going to start moving upward, we're going to say for sure that it's the development of the uptrend. We need kind of confirmations, okay? So that's about the correlation. And for this one here, yes, I will be looking to go short if upon a strong price action on this time frame, okay? And I repeat that if something comes on the long side from Monday onwards on the intraday charts, and our traders they send out the signals for the momentum trading on the 15 minutes, on the hourly, on the 30-minute chart, this has not this has no impact on the swing trading. We are positioning for a little bit, let's say a couple of days trades here, okay, which is fine. Next one, Great British Pound and the US dollar. Look at the daily chart. The daily chart created this shooting star here. So guys, there is one price pattern that repeats itself in all time frames all day long. Would you like to learn which is this one? Come on, say something on the chat. Let me know. There is a combination of price action that works exceptionally well and that repeat this price behavior all the time in all time frames, every day, every week, every month. Okay, it requires a little bit of attention to spot this pattern, but I can explain you how to spot it. And if you start trading yourself this pattern, you're going to see exceptionally good results. So without saying that, you know, you're never going to experience a losing trade. Okay. Are you guys with me so far? Oh, good. Shall we continue? Yes. Thank you so much. Yes. Okay. So which one is this pattern? Let me bring the chart a little bit in the middle. So we expected the price after this lower low to continue trading to the downside. Okay, so we want to go short. Once we spot the trend and we decide on the direction, ideally we want to trade bearish engulfing candles or this kind of shooting stars or pin bars or this kind of pin bars. Okay, but most of the times the markets, they behave in a bit tricky way, and the market puts inside candles. Until this candle here, the market was in an uptrend. On the 4-hour chart, on the hourly time frame, everywhere, everything was screamed to buy the pound, the sterling. But based on the higher time frame, we were looking to short once the price reached this bearish order block here on the daily chart. So the price created this inside candle. Do you guys see that? The black bearish candle, it's an inside candle. So after the inside candles, we want to see two things. The first thing we want to see, ideally, it's a false break of the mother candle. Let's call the one on the left the mother candle. So we're going to refer to that one. If we see a false break of this mother candle, we're not going to rush to buy the breakout here. Why? Because we are still looking for shorts. And what the markets usually do, they start trading sideways like this one here. So this is another inside candle. You see, it's inside of this mother candle, and then the price broke to the upside during the New York session, and by the end of the New York session, it retraced back and closed back within this mother candle. This is what we call a false breakout of an inside candle. That's a false breakout of an inside candle, okay? And that's what most traders, they get caught up in misleading direction. What we want to see from now on, it's a high, and how we want to play this one, it's a high probability trade for two reasons. First, it created a shooting star around a technical level that we wanted to go short, and it's in a line with the trend. And again, you can spot this one on the 1 minute chart. You can spot this one on the 30-second chart. You can spot this one on the daily chart as well. It happens everywhere on the 5-minute chart with no restrictions. You're going to see it all day long. Price comes to a level that you want to trade. You see an inside candle. Most beginners traders, they take the inside candles, and experienced traders as well. Sometimes they work the inside candle pretty well, but what we ideally want to see, it's a bit of fluctuation and a false break of the inside candle to the upside before we go short. We want to see the false breakout like this one here. And if it combines with a strong price action like a shooting star or bearish engulfing, let it be. We're going to take the trade short, and it's a high probability trade. So from Monday on the higher time frame, I will definitely look to short the pound. On the 4-hour chart, it looks like this kind of pattern. And again, if some candles, they're gonna be inside and lift this price higher, it's gonna be even better to take some breakouts with a smaller distance for a stop loss. Okay, guys? Does it make sense? Do you guys understand this? There are only few major news events that we would like to focus on. Monday, pretty much it's nothing. On Tuesday, the Reserve Bank of Australia will report interest rates, and they expect it to keep them unchanged. Again, it's going to bring volatility in the market. Wednesday, nothing significant, but on Thursday, the Bank of England will report interest rates, and again, it's going to be pretty much on the overlap, just before the overlap of the London session and the New York session. So it's going to attract a lot of volatility in the market. And on Friday, guys, it's going to be the GDP in the UK, but really we want to see the forecast on the yearly. On the quarter year, they expect it to increase, but we want to see it on the yearly, what's going to happen. That's going to have the more significant impact. Okay, so as I promised to you, we are very short with the news events. I know they are a bit boring, but sometimes you have to understand a little bit also what's going on with the news. Just to know when and why not to trade or to trade. So the next one about the gold. Let's check the gold. Another interesting setup on the gold that I will be looking to take from Monday onward. On the daily chart, guys, look at this. I can analyze the EuroCAD. Yes, definitely, Nick. NK, sorry, not Nick. So the major trend on the gold, it's up. Can you see that, guys? Price makes higher highs. So higher highs and higher lows. The last retracement in this market occurred, it was down here. It was somewhere towards the end of March. Okay, since then the price moved to the upside. Now, what's the beautiful of this one is that the swing high at point A is here and the swing low at point B is down there. So unless this swing low is break, then we are still technically in an uptrend. Okay. Now, upon a strong price action, you're going to tell me, Theo, won't we going to short the 15-minute or 30-minute chart? Absolutely, we will do it. I'm just talking based on the major trend, which is on the daily chart, and based on what we see in front of us. So this one here, what happened? The price created this ABCD pattern, and again, bearish candle. So false break here, an inside follow through, guys. The same thing repeated in another instrument, and then false break to the downside with this doji. Come on, do you see the similarity? The price was supposed to move lower. It started trading sideways. Traders that they trade only what's on the net about smart money concept. I trade how smart money traders they trade, but also I use what's happening in the market. not just the levels like I put the order blocks, okay, but also the price action. Price action leads everything. So, and the doji candle here shows, yes, that there is indecision at this market, but all these false breakout, they have high probability to push the price to the upside, even from this point to the previous week's high. So if we go down to the 4-hour chart now, we can start looking for long positions based on this analysis. We see the stochastic and the RSI, they both kind of printing positive divergences at a flat or lower low price move. But something I would like you to understand is also the reward to risk. Now, if we are about to go long on this one, guys, and let's say the room of opportunity, it's up to this, it's up to this area here. So if I go long from here when the market opens, and I put my stop loss somewhere under these low points here, and I target this recent swing high just below the high, it's about 1.48 to 1 reward to risk. For me, it's not really worth it that much, because maybe it's going to be a losing trade. Okay, we don't know if it's going to be a winning trade. But if I try to enter with a limit order somewhere, or to wait for a price action to occur on the lower time frames, if you have the privilege of time to be in front of the chart. So somewhere here where all these lows are clustered with each other, and again, that's a very smart point to look to enter with limit orders. You find the low, you find the price level where majority of the candles are touching that price level. And that's where most likely the price it's gonna come to test. Okay, so if I lower the entry point, I might gonna get filled in a better price that is gonna allow me to receive a better reward to risk if the trade works in my favor or in everybody's favor. Okay. Oh, good, guys. Jerome asked, why didn't gold respect the hammer candle? That's a great question on the daily chart. Jerome, I assume you're talking about this hammer, yeah, this one here. And guys, this is a question, yeah, I received that kind of question, not from Jerome, that was a coincidence, but a couple of traders, they asked me about this one here, because it was very obvious that here it's a bullish engulfing order block, and we were expecting the price to move to the upside. And many traders, we took, including myself, we took trades to the upside from here. But again, trade management, it's a part of traders' responsibility. And we said that if the price from we didn't know what was about to happen. And guys, this is a great example to also educate you in price action and how to understand where the levels are about to fail. Okay, again, I don't have that crystal ball in front of me to know what's going to happen every time in the market, but by observing the price and by belief to the price action, we have high probabilities to understand and be right when we're going to be right. Okay, we don't get it right all the time. So after this hammer occurred, the first sign of weakness was, of course, this one here, and that followed by a bullish engulfing, and then the situation got a bit better. But after the bullish engulfing, the market didn't go anywhere with this candle here. For me, it was just a move to the stop loss to the break, even not to scratch the trade, because you don't know what's going to happen. But it was kind of a failed trade. Again, when you enter into a trade setup, you don't know what's going to happen, right? Nobody knows. But if you see some candles, they don't follow through, you better protect a little bit your money, your trade, because you put the money on the table, right? So we have to, that's the only thing a trader can have. That's the only thing a trader can interact with and can definitely protect the profit. We don't know how much the price will run and the market will move, but the only thing we know for sure is we have control over the management of our stop loss and entry point. If the trade we see doesn't move as it's supposed to move, then we definitely can protect our money. Okay. Any questions so far? USD, no, that was the Euro Canadian dollar. Let's check the Euro CAD. Let's start with the weekly chart. We said last week that the price came at this support level. We have the 10 and the 40 period moving averages pointing upwards, which is a bullish signal. And we said that we can wait for a reversal to start looking for long positions. Okay, so that was a high probability trading way to place this. Anyway, so on the 4-hour chart, we could draw at this point this line that didn't respect it, so we can take it out. And the price made a higher high, retrace, and move upward. Now, what we want to see from Monday onwards is that if the price will enter into this strong resistance, it's a very strong resistance, we want to take, if we are long on this one, we want to take some action upon it, because we don't know if the price will repeat the same behavior and start the decline. Maybe it's going to sell off. We don't know that. Maybe it's going to break through aggressively. Again, we don't know that. And that's what I would like you guys to, that's what I want to challenge you. You have to accept that as a retail trader, we have limited amount of space to trade the market, because we don't control the price move. Our capital cannot control the price move. So, not accepting that, once the price, and firmly accepting that, once the price reached this resistance area, we want to see what's going to happen here. We don't want just to say, okay, because I bought, let's say, from this point here, and I have a stop loss to break even, or I make some money from this trade, if it comes here, you know, maybe it's going to break to the upside, and I will keep the trade open. And then the price comes down here, and maybe you're going to start adding to the position because you want to make the money that you think you left on the table, and you're going to start getting a panicking mode, and you don't know what to do. And then you take decisions that they harm your equity instead of adding money into your account. You know what I mean? Okay. Some traders, they might trade for a while, they can resonate with this. So from this point, I will be waiting for the price to reach this resistance. And if it's going to put a reversal price action, but it has to be bearish engulfing reversal price action, or a shooting star with a long tail rejecting the upward prices, then and only then I will be definitely looking to go short. But if that doesn't happen, and the price put only an inside candle like this, it's not a significant reversal pattern. Therefore, I wouldn't be interested to trade this type of pattern. Okay, guys, I'm very selective and extremely selective on the price actions I use. If you want, you can let me know, and I can explain you the price action setups I use day in, day out for any type of trading. All right. So Next one. Would you like to check what's going on with the Great British Pound and the Japanese yen? That's another volatile market which we like to trade because volatility is the key to the Forex markets. On the daily chart, the price started this upward move, consolidate here, break to the upside, and on Monday, guys, it retraced about, it gave, I think it was 500 pips here. How many pips? No, 680. 500 pips was the USD JPY. So 680, almost 700 pips on Monday, and then on Wednesday with the FOMC, I think that was this one, the price declined further. So pretty much it retraced all the previous weeks trading activity and leaves with a trader and leaves us with uncertainty. What are we doing next? Are we going long? Well, yes, we're gonna look to go long first because the market is still in an uptrend. Second, by the way, guys, there is a very interesting pattern on the US oil, on the WTI, and I will show you right after the Great British Pound, Japanese yen. You see the candles, they are getting smaller. Their bodies, they get smaller and smaller and smaller, and that's in a trending downtrend on these three candles. So if we're going to see a reversal price action here, we're going to try to scalp on the 4-hour time frame. Why not? If we go on the 4-hour time frame and we find a tiny price action, bullish engulfing, or a kind of false breakout followed by an inside candles, then we can try to go for 2 to 1 if there is a 20, 30, 50 pip stop loss, whatever. This is extremely volatile currency pair, and a stop loss of 50 pips, the market can give it in within a session. Okay, so on a daily basis, it trades about 100 on a normal day with normal volatility. The Great British Pound, Japanese yen trades with about 150 pips average true range, ATR. So if we go for a 50 pip stop loss or 40 pip stop loss, we can make 2 and 3 to 1 if the market conditions allow us within a day. Okay, but if you go with a 50 pip on the Australian dollar, US dollar, maybe you're going to take a couple of days or more to go for a 3 to 1 or 2 to 1. Okay, because it has half the volatility of the GBP JPY. Guys, I would like to show you the head and shoulder pattern on the daily chart on the US oil. Technically, it's extremely well set up. Price made higher high as expected, and we were looking definitely for the price to stop and reverse at the previous swing high, like the price did it here. The price consolidated, it moved upward, and at the previous swing high, stopped, price action, moved to the upside. Great. But what happened here, from this point, the price retraced all the way back. For us, it was a red flag. We didn't want to take pretty much any trades because it's like with the Japanese yen and JPY. With the Great British Pound, the JPY, that we said we can scalp only if there is a small price action. But this one here, it didn't give us anything on the 4-hour time frame to scalp with, so we didn't do anything with that. But at this point, I wasn't sure what's going to happen because the market lost its uptrend, well-defined structure. But after this occurred, we identified that the market created a left shoulder, a right shoulder, and a head. The neckline is defined because it slopes upwards, and that's great. And the next one we want to see is we measure from the broken point. That's very important, guys, extremely important. Because some traders, they might gonna see the price moving all the way here, and they're gonna start looking, they're gonna still be looking for the head and shoulder pattern, which it's gonna be over by that. So after the price break to the low point here, and we define that it's a head and shoulder reversal pattern because it came from an uptrend, and we measure the broken point to the swing, to the head, and we can either do it with a Fibonacci retracement or we can use the ruler. Whatever we're going to use, we measure the distance from here to there and we replicate and we mark it on the chart. About $74, it's the distance, it's the minimum travel distance if the price will continue moving lower. But where is the trick now? The trick comes that there is a weekly low at this point here. So this is a support, and it's a strong support. Guys, it doesn't mean that if the price creates a powerful reversal pattern, we will forget everything about support and resistance. No, there is a strong support in the market, and we have to understand that at this point here, anything can happen. Maybe the accumulation of buying orders will overcome significantly the sell orders, and the price will explode to the upside and will not respect any reversal pattern, any head and shoulders, nothing. So how I will play this one, because the price already is extended, I want to see a move back to the neckline. But if the price, most of the time the move occur, but if the price won't come back to the neckline and it's continue lowering and it will reach the $74, which is the minimum target, maybe the pattern is over. We have to be very careful. Okay, if the price will come back to the neckline, again, upon a strong price action, I will look to short. It's going to take some days, of course, and also we can look to short it on the 4-hour time frame with a smaller distance between the entry and the stop loss, so we gain better reward to risk. And to look first target to be the previous, not the previous, sorry, an old weekly low. That's the first target, and final target to be the $74. Okay, is that good? So there are a lot of setups to watch for this week, guys. Honestly, the majors, they have good setups now. Some indices, this kind of the US oil, the gold, everything has good setups. Sometimes there are times like towards the end of last year in January, February, most of the best setups, they were on all these pairs down here. New Zealand CAD, Aussie Swiss, Aussie New Zealand Swiss, Aussie New Zealand on this one here. Aussie CAD, they were trending or respecting the level so well. Whereas the majors were very choppy and they were moving in a very, I would say, dysfunctional way. Okay, so, but this time now, the majors, they have some good trends and we can focus more on this one. Someone said, Bitcoin, as always, did break 64K recently. Wow. Let's check the Bitcoin. Yeah. I'm putting an analysis tomorrow for the Bitcoin and for the majors for a prop firm. So that one, I use the 50 and the 200 moving average to point it. But yes, these are the levels that I marked. If you want to put them from the technical point of view, the 65,300 and the 67,200 are the major levels if the price move to the upside. And the inside support here at the 60,000, it's very, very strong area of support if the price declines. And then we grab the previous week's low around 56,378. Okay, these are your price action. Theo asks, please explain the price action you use. I think we're going to do it next time because, as always, I overstretched the webinars. And I know that most of you guys, you also have obligations, and I don't want to keep you here for like a boot camp, a 2 hours boot camp. And gas, do I have the end gas on the commodities? Yep. Finally, the end gas, it rebounded a little bit. And after the end gas broke above this monthly resistance, we do expect it to continue and move to the upside. From what I see here, there is a well-defined channel. You can use the channel lines to capture it a bit better. Yep. So we have this 1, 2, 3, and the 4th point. So the channel is valid. The price in a strong upward move, the price will respect the middle line of the channel. So we can keep looking for long positions if the price continue to move to the upside. But if it rejected here and we look for shorts, we're going to go up to the middle of the line, become the middle of the channel, because there is support area down there. Okay. Fenan, we explained the Great British Pound US dollar in very detailed way. After I end this webinar, you can visit the YouTube channel and it's going to be available to watch it. Okay, just move it a little bit forward to go to the Great British Pound US dollar. I think it's after the 10th minute. You are very welcome. Guys, any other currency pair? Anything you want to see that we didn't explain so far, or we're gonna wrap it for today? I don't see any questions. Jerome, anything CHF, Swissy, although we don't use, I don't use to trade Swissy, but yeah, again, I will have an analysis on Monday for that one here. So for the Swissy, the price on it's easier to see it on the weekly chart. If you look at these guys, the price rejected these tops here. Okay, bearish engulfing here, and we do expect that the market is going to move to the downside, because at this point the price was making lower lows. Now it retraced 100% of the move, and it confirmed that the market is ranging. So as the market confirmed a range, we want to go short from this point here. So if everything will play out well and we go short, we have to understand that to go short, we need some kind of market structure. On the 4-hour chart, the price bounced from this 0.99, let's say 900, without breaking to the downside. So for me, it's not good enough to go short just based on, because you read here there are negative divergences. Price makes higher highs and the RSI and stochastic make lower highs. But we want to see market structure to change. So we want to see these levels, the weekly low, to be cleared by the price. Again, remember, we are not the market movers here. We can't interact the price, how it's going to move. So we have to be patient. Okay, guys, for this one here, the high probability setups are screaming to go long because there is a bullish price, a bullish market structure. But on the other hand, there is also bearish divergences that we don't know how they're going to play out. Alan said cocoa, it's going crazy. Yep, definitely. Marianne said, all good. Thank you for your analysis. You are all welcome. So, guys, for me and the whole Elevating Forex team, would like to say a very, very, very big thank you for attending the webinar. I hope you gain a lot of value out of this webinar. Please rewatch if you want what we said. If you have any questions, you can send us a message at support at the Telegram channel, or you can send me direct message at the Telegram channel. However it's easier for you, doesn't make any difference. Okay, maybe you have a question on price action, maybe you need anything, just let us know. Okay, we are here to serve you. We're here to support your trading journey. And of course, I wish everyone best luck for the upcoming week. Okay, so guys, again, thank you so much. You've been great. And I will see you all next Sunday at the same time. Bye, everyone. Good night.